This tutorial about the goods and services tax will talk about the theory behind it, and in particular how to account for transactions that have the GST component involved in them. So let me talk about a bit of theory first, and then I'm going to show you how to do the general journal entries using an illustrative example in the book. Okay, so GST is an amount of usually 10% collected by businesses whenever a purchase of a good or service occurs. 10% has to be charged on every sale that is made. Some items, like food for example, non-processed food, are GST free, so there's no GST on those items. Usually the business has to pay every month or every quarter, and they do so in a thing called a business activity statement. We don't have to know about that, but you may have heard about that, so I'm just mentioning it in passing. But that's a mechanism that businesses actually use to pay the total amount of GST to the government, either every month or every quarter. Now, another aspect about GST is that businesses, if they pay for goods and services that got GST on them and then use them in their business's production process, they then get rebates for it, because essentially items shouldn't be taxed twice. So whenever there's a purchase, then the business is able to get a rebate, and I'll show you that later, how that occurs. Let's look at a simple calculation. It's done on the cost of input of any good or service that is sold. Okay, so if we have got an article of clothing, say for argument's sake it's $100, we've got to add on the 10%. That's a bit that the businesses collect on behalf of the government, and advertised sales price in Australia by legislation must always include the 10%. Okay, let's assume that we've got an item that we've purchased from our suppliers for $400. We must charge 10%, so add on the $40. So the sale price there you can see is $440. Another way of looking at it, and you will be presented with this little complication, is that you might get a transaction which includes the GST already in it, and then it's up to you to calculate that GST. Just remember, we have the component of, say, $400 plus that extra 10%. That's why for any amount you have to divide by 11 to get that one item that you need, that is the GST. And here's your calculation. So for example, the sale price is $440. You divide that by 11 and you get the GST of $40, and that's the component that we must remember in order to account for the GST, either as a rebate or indeed if we sell a good or service. Here's another way of looking at it. If it's priced before GST, we divide by 10 to add the GST component on, but like I've just shown you, if we have got the price including GST, we must divide by 11 to get the GST component, and I'll show you some practical examples in a moment to see it at work. Here's an example of a invoice. You can see here these two items here, because they're non-processed food, they haven't got any GST, but these processed items, which by legislation are GST inclusive, that must be included there, as you can see. And then down the bottom here, which I'm not showing you, is the total amount payable, and in this case it'll be these don't have GST and these two items do. Okay, so how do we account for it in the general journal? So when we buy goods and services, whether I'm in a jeans store, I buy some jeans and I pay GST on that, but I want to sell them at a profit, then that amount I must be able to get rebated, or alternatively, if I have other costs like rent and so forth, I then have to account for this thing called GST credits received, which appears as a debit item, which I'll show you in a practical example in a little moment. On the other side, when we sell goods and services, we have to collect these monies on behalf of the government, and we have this item which ends up being a liability. That's why it's being credited there every time we make a sale. Now that's the theory behind the GST. If you're a bit unsure, exercise 3.6 on page 69 is a good little exercise to do. Over the page on page 70, it shows you the tax invoice and how it all works in terms of all the calculations. So that's a bit of reinforcement for you. But where I'm going to go to now is to do the illustrative example, which is on page 76, and I'm going to show you how those entries work.